What is good, guys? Today we are continuing with liquidity, continuation of liquidity. This is where most people get it wrong, and it's a quick fix. Let's get into it. So what we want to see here, as we spoke last week, is this push to the upside. Nice. Now, this is not a problem. This whole buying model is not a problem. Now, where people get it wrong is when we have now done selling, right? Because last week we spoke about this push on the downside, right? The reason for us to sell. Now, if you didn't watch the video from last week, check it out, okay? Because it's going to help you, help you so much. So we need to see that nice push to the downside coming from this area, right? And we were open here, we came up, we closed, we came down. Now, remember that you sold, right? You sold this whole move to the downside, right? But where did we start with this whole model? Here. We started on the left side. Now, here, when we start here, we are not done. We still need to come close this candle, right? I think by now you know what this is. The last candle that pushed price to the upside, by now you need to know that is an order block, okay? You can go to any channel, everybody's saying the same thing. The last candle that pushed price up is the candle that is very important. The price will come back there and react to that candle. This does not mean that price will sit there and push forever. Sometimes it comes there and reacts for breathing or for a retracement. Now, this is what you need to do. This is where the trick is, okay? Listen carefully. We're not done. We need a push to the upside. So the price is going to do something like this. Come here, come up, react here. It is not a long-term buy. Price is not coming to take out everything here unless if there's news, right? News in the market and volatile news. Price is going to come up there. We are still selling. We just need to close this leg because most of the time this leg is open, this leg is aggressive, there's orders there, the bank needs to close them orders. So you need to just wait. If you miss the buy from the order block, right? If you miss the buy from here, so we're going to have this buy closing all of these orders, right? Then we're coming back down. Now, if you go to your chart, this is how it always looks like. And you wondering if you were a buyer right here, and you expecting price to come all the way to your support, to your resistance area right there, or as we say, to your liquidity area, or to your imbalance, or to your fair value gap, it will not go there because we are still open right here. That's where we are open. So what you're expecting is for price to clear out orders, come back down, not for price to go all the way up. And then price is going to leave something here where it stopped. So remember I said last week, where you bought, you will sell. Where you sold, you will buy. It's reverse trading. So this side, in this channel, we do reverse trading. We don't trade like everybody else. When people are buying, we are always selling, right? Because we're patient, because we know what we're doing. There's no rush. We know that we'll get an entry again. There's no rush this side. And when we're wrong, we are wrong. We love being wrong in the channel, right? We don't know everything in this channel. We are always students of the market in this channel, even though we have 3 years, we know we are profitable in the channel, but we are always students of the market, okay? So if you missed everything out, or you were taken out by price when it was pushing up to that area, very important area. And remember from last week, this area is the area where we bought. So the same area where we bought is the same area we will sell, because they need to close that. They need to come there. This is where people call it again demand area. Does not matter. We just need to get there. What I know is when you get there, we are selling. We are going short here. You are not buying, you are selling when the price gets there. Why do we sell when the price gets there? If market comes all the way there, closing out all these areas, now have become old high. So when it's old high, we need to come back down, right? Because now we will be taking out all this, let me write this down. We will be taking out all the liquidity from those area. So all those stop losses from people who thought price will come all the way up, no, we know that from there, we are preparing for ourselves to go down. Now, if you need any more explanations, go back to the first part 1, then look at part 2 and look at part 3, and you will see what I'm talking about. This model is the best model you need when you're starting off trading. If you're a media trader, you need this model. It is so good. It is so powerful. The only thing you need from anything that have to do with ICT concepts or model, understand what price is doing. Wait for price. Do not expect price to do the same thing every single day. If you want to get it right, if you at least want to be right maybe 80% of the time or 75% of the time, trade New York session, because this model, it always presents itself on New York session. Why? Because London will come down, push price down. When you push price down, New York will come, take out London's liquidity, and it will want to react on London's orders. So they will take all the orders out, push the upside, and then we coming down with price. So it always does the opposite. That's why I said, when people are buying, we are preparing to sell. When people are selling, we are preparing to buy, right? Because we understand now. We don't understand how the bank works. Please, we don't talk like that here. We understand what we have studied. We understand what we have back tested. So this is what I have back tested throughout the years. I don't know what the banks want to do and when they want to do it. All I know is when price reach a certain area, I am preparing myself to sell or to buy based on what I have practiced. I do not trade like a bank. I do not know where that term comes from. But look at this and practice this. Draw out this model as it is, the way I'm drawing it for you. Print it out, do something, put it in front of your desk, do something, and you'll see this model plays out all the damn time. Not forgetting the buying model and why we bought. If you still remember why we bought here, why we bought here, why we were out here, and why we bought here. We bought on the highs. We do buy on liquidity because we know that price will come here, come back a little bit down, go up. Then they need to finish up with this tail. They will come back down to where we did what we bought. There, we are not longer buying, it's a sell, unless if you're a scalper. So from there, we're just going to wait. We wait on this leg. It repeats, it comes all the way down, we wait, and then we go back down with price. If we are seeing traders, the only thing we're waiting for now is price to react to the first candle there before it went up. And then we'll wait there, push price to the upside, liquidity, come back down with price. We do not buy all the way up, no. Sells are not done. When you're seeing a model like this, let me just move this for you. When you're seeing a model like that, just know that price will come up to clean out those people who don't know what's going on, or let me just say people who are like scalpers who are still holding there, then they buy thinking that price will come all the way up. No, it's coming back down. It just needs to clear out these orders just like this, and that is price. Please like to subscribe. Thank you so much. for supporting the channel. See you again soon. Cheers.